It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, September 3rd, 2015. I hope you guys are having a great week with us. What an incredible day today. Riding that crude all the way up. S&P had a nice bull run. Easy money back to the lows on gold and euro. We've had a great week so far. I hope you guys have had a great week right along with us. Now, very important before we jump into tonight's newsletter, and you know I got a good one for you guys tonight. I'm not going to leave you hanging here going into the holiday weekend. Got a great newsletter in store for you. Get some really good opportunities coming tomorrow, especially on the gold, the euro. Well, they're all going to be great for us. I'm going to jump into those in a second. Also, tomorrow is a Friday. It's non-farm payroll Friday. It's also the Friday before Labor Day weekend. So we have a little bit of a special scenario going into tomorrow. I'm going to talk about my plan for tomorrow morning at the end of the analysis today. So if you're trading tomorrow, don't forget, stick around towards the end. And I'm going to go over the plan for tomorrow. And then, of course, Monday is a holiday, so we'll talk about what to expect for next week. Before we jump into our charts, though, and again, I'll wrap up with some information about Labor Day weekend. Remember, tomorrow is not your average Friday. It's a Friday before a holiday weekend, but there's non-farms tomorrow. So we got to talk about that in great detail. I got a plan for you. Before we jump in, though, I do want to remind you guys, make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube page, there's a link in the description of the video that'll take you over here at trading blog. A couple of reasons why you should be over here watching it at Sideways Markets. First of all, I have an invitation for you, get a free pass for you to come out and join our live trade room as a guest for a day or maybe a few days next week. Grab your free pass, come out and test drive our live trade room as a member for a day. Also, lower left-hand corner, I have a mailing list here for our nightly newsletter. All I need is your name and your email address, and I'll gladly send you an email every evening when this nightly newsletter is ready to go. That way you never have to worry about missing another newsletter. Also, very important, you can download all the charts that you're going to see in tonight's video right below the video tonight on the blog. Click that link to download today's charts. And then over on the right-hand side, you can register as a free trial member. Test drive our beginner, intermediate, and advanced levels of membership. I take a lot of pride in the fact of having the best free trial on the planet. Also, you can learn more about what it means to be a member here at School of Trade. You can read member reviews. And don't forget, we've always got someone standing by 24/7, 365 to help answer all your questions. Guys and gals, we've got a jam-packed newsletter in store for you. I'm going to go relatively quickly here because I know you're probably getting ready for this Labor Day weekend. Let's start out here, lower left-hand corner, with our crude oil futures. Crude oil. What happened? Nice big run up. Got that just shy, boy, of that measured move coming all the way back up to those highs. That lack of, now obviously we were able to make some great profit on the way up, but we missed that high, and I think that's going to be a very telling sign and a big clue for tomorrow. Let's take a look at the notes here on crude, and as you guys know, in last night's newsletter, we anticipated this spike in channel back up, right, the correction, and then bammo, right back up here. Expected it to go back to the highs. We didn't quite get it at the highs, and right at the end of the morning here, it kind of fell apart and collapsed back down. So we are range bound, right smack in the middle of the range this evening. As you can see, the weekly trading range, been watching this weekly trading range all week here. We are smack right in the middle of that trading range, and of course, you know, don't fiddle with the middle, right? We know this is where the sloppiest price action is going to be because sellers will be selling at the highs, buyers will be buying at the lows, and right in the middle of that range is where you're just not going to have a lot of strong direction, right, up or down. So that's why it's going to be the kind of the most slippery part of the range. The easy money is always spent buying at the lows, selling at the highs, and, well, let's keep going. So here's the first big clue. We can see the buyers did not finish the move up to the highs of the range today, which means the objective hasn't been completed. The lack of success tells us the door is wide open for these sellers to run this back down to that range. So we know that there's a rotation. It happens in channels. It happens in ranges. We rotate from the high down to the low. That's why in last night's newsletter we were looking at rotating back up towards these highs. And we almost made it. If you recall, there was a resistance zone up here that kind of got it stuck in the mud there a little bit, and then it came right back down. That lack of completion tells us one of two things, in my opinion, and we're going to look for some proof tomorrow morning to see which of those two is likely to happen here. First of all, the buyers failed, but did they really fail, right? Did they really fail, or are they just reloading those weapons and getting ready to go back up to the highs again? You're going to see the same thing on the S&P chart as well. You'll also notice we're sitting right on the 50%, and that takes us down, and we can basically split this range in half and look at it in the term of another trading range. And what do you see here? Well, I see the sellers tried once to go below the low. Here's what's likely to happen. We're likely to see those sellers try one more time. If they cannot get that price to get and stay, key is stay, below 46.38. Be patient, wait for proof. If they can't get to stay there, they're going to make a run and try to finish that objective all the way back up to that high for tomorrow. You know, think about it. If you bought these lows down here, as we suggested earlier on in the week, you're taking your profit up near the highs, right? Again, maybe they had to put a few more bullets in the clip, reload, and then unload back up towards those highs again. What's going to be the key? The key is going to be, we know the markets like to try things twice. Why? Because the markets are nothing more than groups of people. You know how you try things twice before you give up? Yeah, that's exactly what the markets do too. It's amazing how simple it is. So we know we've got one try. Keep an eye out for a second try. If it's a higher low, oh baby, just give us the money already. If we see a higher low here, back in, you've got some easy targets waiting for you overhead. But the objective is to go back up to that 48.89 to finish the job that wasn't finished today. Now, what if that lack of completion back to the highs, you know, crude oil, just like every other market, they don't like missing those highs by a few ticks. And you can see that was really close to hitting that high. Something clearly, or someone clearly ran out of some bullets, ran out of gas, if you will. Nope. Okay, there was a pun intended. So, with that said, this could be that door wide open here now for those sellers to take this back down to that range. Here's what's likely to happen. We're likely to see a lower low on that second push down, followed by, here comes that number again, followed by the inability for price to get back above that 46.38, and price will likely end up at the lows at 44 in tomorrow's session. I will go out and look for an ABCD for the easiest targets down here tomorrow, but we know the objective is to get back down to those range lows. So, buyers, keep an eye out for a higher low, back up to the highs. Sellers, keep an eye out for a lower low. Not enough, just a lower low, followed by price unable to get and stay above that 46.38. And don't rush it, because you're probably going to get a nice ABCD coming down here, and that will give you where that target will be. Although the objective is to test this low and dig into that low, that ABCD will definitely be the easiest target for you going into tomorrow's session. We got non-farm payrolls tomorrow, so this could go bonkers, or it could just sit right in the middle of this range. We're going to be watching this stuff in real time tomorrow morning. How about the S&P? The S&P is going to look somewhat similar. S&P is going to look a little bit similar here. As you can see, the S&P, same thing that we talked about last night. We've got the big old trading ranges here. We talked about this last night, right? We had a channel up. We knew there would be some rotation, right, inside that channel. And the objective was to get back up and test the high of that range. As you can see, just like the crude oil futures, we were unable to get back up to the highs. Is that a sign of weakness? Did they fail? Or did they just need to reload the guns a little bit before they take this baby right back up to those highs? We're going to need some proof. And I'm going to be a little bit of a broken record here on the S&P, because as you can see, If I swapped out the label on this, I'll bet you wouldn't even be able to tell, besides, of course, the prices on the right. So, E-mini S&P is bullish and rotating back towards the highs of the range to finish the job that started earlier in the week. The key level to watch, same thing we talked about on crude oil, is that 45.75 support. And if these sellers cannot keep price below this level, we will be looking for a test of the highs at 75 quarter, 75 half. If the buyers can't keep price above the 50%, they will run this back to fill the gaps. Oh, you mean those little gaps? How important can these cute little gaps be? What is a gap, by the way? Well, a gap in this context, not to be confused with an opening and closing gap, right, which most people are familiar with. This is a gap where we have two candlesticks back to back that don't overlap each other. You're going to see a big dramatic one on gold, so stay tuned. These are a little bit tough to see because they're kind of hidden in there. I always do the hard work for you guys, don't you worry. On gold, though, you're going to see a dramatic gap, and that's going to be one of the biggest clues on gold tonight. So here we are, just like the crude oil. We got a big old weekly trading range, and we are smack right in the middle of it. Take that range, cut it in half. You can even cut it in quarters, as you can see here. It always works very, very well this way. And, of course, just like crude, we see we have the sellers tried once. Again, very similar to crude. If we don't get a lower low here, we can expect this to rotate right back towards those highs. Finish the job they started. If we do see a lower low, and again, a lower low in my opinion would be definitely the start of this, as long as we can stay below that 45.75, 45.73, but obviously the S&P ticks in quarters, so heads up on that. If we do get a new lower low here and then stay below it, we're going to make our way back towards that gap fill. That's really, in my opinion, a real tasty, tasty target for these sellers because trust me, guys, professional traders see that and they know those gaps almost always get filled. The big question, of course, is when will they get filled, right? We know they oftentimes do. The question is when. The unfilled gaps, the lows, tell us these sellers have unfinished business to do at these range lows. Now, one more word of caution. If you haven't been paying attention yet, tomorrow's non-farm payroll Friday. This could go anywhere or it could go nowhere, right? We do know that for a fact, and I'm going to talk about that plan we're going to have here at the end of this video tonight. All right, now you know the plan here for the S&P. Very similar there to the crude oil. Shall we continue here? How about some euro? How about some euro? Boy, that euro looks good for us right now. We filled the gap that we talked about yesterday. Remember that earlier this week? Saw the buyers try once, saw the buyers try twice. Nah, we're not really interested in going higher here. We'll come all the way back down, fill the gap, all the way back down, retest the range, and oh, don't adjust your TV sets, kids. That went all the way and extended through one range into the next. And do you think that was a coincidence? I don't think so. No, I don't think so. Now, what do we see right now? I see we definitely want to keep an eye on this big range. Okay, this weekly range from 1260 down to 1180, that's going to be your bread and butter if you're trading this tomorrow. Here's what I see right now. We got a ton of great clues on this. First of all, spike in channel. That spike in channel, if it continues, we've got a target waiting for you down at that range expansion support, 1033. Mark it. The spike in channel, though, I am anticipating, again, we do have to be aware, tomorrow's non-farm payrolls. If there wasn't some crazy news coming out tomorrow morning, I would be able to really be more confident when I say I anticipate this spike in channel will fail. Now, look at how this lines up right now. That's a gap overhead. That gap, now that you guys are specialists, experts on spike in channels, if we fill that gap, that will successfully break and fail this spike in channel down, right? The beginning of the channel. What does that mean? That means we get a gap on this chart that's going to act like a price magnet. If these sellers can't get their act together and keep this price going lower, We've already rotated all the way down to one deviation of that range. This is going to get sucked back to the gap and then most likely right back up to the big old volume profile bump on the left-hand side, right? You don't really need volume, but boy, oh boy, does this make it easy as a visual to see where we're likely going to head. And from there, who knows? It could rotate all the way back up and revisit those highs again. Again, tomorrow is non-farm payroll Friday, and the U.S. dollar is going to be a yo-yo tomorrow after this news report. And guess what currency is the biggest in the basket that makes it the dollar index? The euro is 60% of that U.S. dollar index. So that's the first reason why I see this being a very likely scenario. Again, we have major news tomorrow, so I really got to be careful when I say how confident I am, because again, tomorrow morning at 8:30, who the hell knows where this thing's going to go, right? It's going to fly off this planet if it really wants to. So we're getting ready for this tomorrow, but anything can really happen. Another clue? Here's another one. Again, focus on this trading range. We've got the sellers try once, the sellers try twice. You know what's going to happen if they can't keep this going lower. See ya, suckers. It's going to go right back up. And again, gap fill, price magnet, and this thing, again, depending on how dramatic the report is tomorrow, we may see this thing really rotate all the way back up. It is the euro we're talking about. This ain't the crude, right? So this is not a market that typically really whips, but it's definitely something that tomorrow may have a big impact for. So euro, bearish right now. However, we're clearly range bound, and the sellers have tried twice to push, which tells us the buyers have a shot to return it back to the original range from this week. Starting with that gap fill at 1166 and then back to where the most amount of volume was traded earlier this week. That's my price magnet. Now, what if this thing does keep going lower? I've got some great targets for you. And if it does keep going lower, you know exactly what to expect. Spike in channel, A, B, C, D. It's going to put us right about, oh, that can't be right. At 1,000. Remember, spike in channel, start at the beginning of the spike, the lowest part of the channel. The C is the correction. We talked about it on Monday. It's amazing how that lesson on Monday is turning into a very, very applicable technique as this week goes on. So now you know the plan. If this thing takes off tomorrow to the downside, my money's on 1,000. My money's on 1,000 here for us on that euro. Looking good. Again, first shot back into the range. Second shot down to 1,000. Shall we keep going? I hope you said yes, because I'm going to do it anyways. Let's keep going. Finishing up here with gold. Gold is completely range bound and has completed the full rotation from highs down to lows, where the sellers have tried twice to push the range and they appear to be struggling. We are watching for seller failure at these lows. We should get an easy buying opportunity as long as, again, tomorrow's non-farm payroll report doesn't mess up our parade here. However, okay, be aware. Tomorrow, 8:30 a.m. is going to be the big number tomorrow morning. Remember, guys, when it comes to the markets we've talked about so far, it's U.S. dollar, gold, euro. Those are the big impacted markets when it comes to non-farm payrolls, so keep that in mind tomorrow. S&P will be a lagging reaction to it. Crude oil, you may not even see much of a reaction at all tomorrow. But remember, whenever we talk about jobs, we think about the Fed, and when we think about the Fed, we think about interest rates being hiked up in a couple of weeks, and that, of course, has the U.S. dollar, that has gold, that has euro, and so, of course, yada, yada, yada. This market has a huge potential of being a whippy animal tomorrow. Now, as crazy as it gets tomorrow morning, we still do expect this range to be respected. So, as you can see, major trading range, lots of volume here right in the middle, lots of volume here in the upper 2/3. Those are going to be our targets here tomorrow as we go back inside this range. Now, there's that good example of that gap. See that gap now? That's a really good example of a gap, right? That one's dramatic. You can't miss that. And guys, I'm telling you right now, if my poor eyesight can see that gap at 11:30, I guarantee everybody sees it, and I'll bet everybody knows exactly where that gap is. So what we see right now is, now again, I don't want to guess, but what we see on the chart is the proof. We've got one try, two tries, and an A, B, C, D going back to fill that gap. If we fill that gap, what's likely going to happen is there's a phantom trend line here. Now, I talk about this quite often. Guys and gals, if we find I mean, this is obvious trading range, right? I mean, does it get much? It's obvious. It's really obvious. We went down, we went up. I mean, I don't know what more you want me to say here, but that's a pretty darn blatant trading range. So here's what's going to happen. There are going to undoubtedly be traders out there that are looking at this trend line and going, ooh, I'm going to sell this trend line, right? Because maybe it's a channel or, whatever it is. And okay, it's not a trending market right now. This is a range-bound market. So think about what you would have done when you didn't know about my newsletter, when you didn't know how to do this the right way. What would you have tried to do here? You would have tried to have sold it, right? You would have tried to sell it. So you're going to try to sell it. Well, what's going to happen? When it breaks, what's going to happen? Sellers get stopped out, gap gets filled, price launches at the point of control, right, where the most amount of trades were traded this week, and then possibly finish the rotation back up to those highs. Okay, so we know that's likely, and that's why I marked that phantom trend line on here, because smart traders tomorrow are going to use this for either a failure. The real smart way to use this trend line, though, is not going to be to buy the failure. It's going to be to wait for the pullback on the opposite side. That's one of the sneaky ways to use this, right? Because normally if you try to buy that first one, you'll get stopped out before it goes. So a better way to do it is to wait for that price to break it and then use it on the opposite side, right? And what will be beautiful is if we could get it to use it without filling that gap, right? Target at 11:30, target at the volume spike, target 11:40, target all the way back up. Now you know the plan for tomorrow. But Joe, what if it goes lower? What if it goes lower? Okay, you talked me into it. It's unlikely, but hey, we have non-farms tomorrow. You got to be ready for everything. Well, take that trading range, copy it, paste it, expansion, 50-50. These are your targets. 11:15, 11:12, 11:10, 11:04.6. Okay, those are your targets for tomorrow if those sellers somehow can keep this price below that range low. I'll tell you though, the money is going to be easier getting this thing sucked back up into the range. The gloves are going to come off tomorrow morning, guys. So here's the plan for tomorrow's non-farm payrolls. Tomorrow is non-farm payroll Friday, the first Friday of every 1 month, unless, of course, the first day of the month is a Friday. Tomorrow's non-farm payroll Friday. It is also the Friday ahead of Labor Day weekend. That means that you're going to have this very sick, twisted personality to this market tomorrow. The name of the game tomorrow is get in early and get the hell out of there before you lose the money you made early. Don't bother with it before 8:30. It's not going to move very much. After 8:30, give it 10 minutes at the least. It's either going to be extremely fast and untradeable, or it's going to be extremely slow and untradeable. It's either going to be extremely fast because the report surprises people, or it'll be extremely slow because the report comes out as expected. Same thing as the ADP kind of leading report on Wednesday. Chances are for tomorrow, it's a sleeper. Chances are tomorrow it's going to be a sleeper. I have no idea what tomorrow's going to bring. Okay, let's be very upfront. I do not know what tomorrow is, but everyone has had all eyes on this report because they're talking about raising rates in September. So we know tomorrow, get in early, get out early. You're looking for trades tomorrow, literally between about 8:45 and 10 o'clock. if we're seeing consistency, I'm not talking about gambling craziness. I'm talking about consistency in the price action after 10 o'clock. If we see it consistent after 10 o'clock tomorrow, well, I'll be very, very surprised. Because there are going to be traders in the market tomorrow morning that have no choice. They've got to trade with their clients' money tomorrow. Either got to get in, they got to get out. So you will see some big elephants in the market, but it will be because of handcuffs. They're going to have to do something. Once they place their big orders and get the market moving, just like you're going to want, they're going to close up shop, place their stops, and they're going to hit the boat, hit the barbecue, hit the long weekend, just like I am. Well, I'll probably be here dealing with some work stuff tomorrow until the middle of the day. But the plan for you, the plan for traders tomorrow, is going to be get in early, get out early, and promise me, okay, borrow somebody else's account if you want to trade after 10 a.m. tomorrow, or trade on a simulator. And be careful before 8:30. You're not going to see a lot of volume tomorrow before 8:30 because the big money in the market's not going to dare get trapped on the wrong side of the trade before the news comes out. So, again, tomorrow, get in early, get out early. Enjoy your Labor Day weekend. Trust me, you don't want to be sitting there trying to trade the junk you're going to see after noontime tomorrow afternoon and waste that last summertime weekend. So be well out there. Wear the sunblock, right? Stay hydrated. Be careful. Be careful. I want to make sure everybody comes home with all 10 fingers and toes, both eyeballs working, and your sense of smell next Tuesday. That's right. Monday's a holiday. Tuesday, the next newsletter is going to be Tuesday the 8th. That'll be the next time, of course, we talk to each other. We work together here on our nightly newsletter. I'll be in the chat room tomorrow morning with all you students at 8 a.m. Eastern Time. You know the plan for tomorrow. Follow the plan. And if you don't have a plan, if you need a plan, please don't forget, here at School of Trade, we specialize, we've been doing it longer than anybody else on the planet. We help new traders launch a career in the financial markets. I'm not a gambler. This is not a hobby. This is a job. This is a beautiful career and an amazing opportunity that literally anyone has. It's the beautiful thing about the financial markets. Every day, somebody with zero experience, zero knowledge of anything, joins as an advanced member and gets taught how to do this the right way. Starting your career, building your knowledge, learning all the skills and techniques, and then trading with us in our live trade room. Check out the free trial. I take a lot of pride in the fact that our trial is the best in the business. You're going to learn more with me in 1 week for free than you will anywhere else in the interwebs. And then don't forget, whether you're a beginner trader, brand new starting out, or you're an advanced experienced trader, we have a place for everyone that wants a serious career in the financial markets. Guys and gals, I've got someone standing by here 24/7, even over the holiday weekend, and I would love to help you out, get you started next week. Trade room opens up again on Tuesday next week after the holiday. Newsletter goes back on Tuesday after the holiday. That's it for me, guys and gals. Be well out there. Be nice to each other. Be safe. I'll see you on Tuesday night, and hopefully I'll see you tomorrow in the chat room with us for Non-Farm Payroll Friday. I'm out of here. My name is Joseph. Adios, amigos. Bye-bye for now.